Good morning, everybody. Happy Monday. We have an amazing show for everybody today. What do we have, Krystal?
Indeed, we do. Lots of stuff that is breaking this morning. First of all, we have some new comments from some of our leaders, including President Biden, about whether or not we might be heading towards a recession. Very telling comments indeed. We also have a new union, Apple Store workers outside of Maryland.
Big deal.
Forming Apple's very first union. So that is exciting. We'll give you those details there. And whether or not the fact that the economy is sliding off of a cliff may impact that wave of labor organizing. We also have some, you just can't make it up, the stuff that continues to come out of Uvalde.
Cover up.
Now they are, it really is like a whole of state cover up at this point, from the governor all the way down to the local officials trying to keep the public from ever seeing body cam footage. But we do have some sources within the investigation revealing some important details, some new lies about exactly what went down on that horrific day. We're also learning more about just how screwed up the airline system is. Price gouging, scheduling flights that they know they have no prayer of ultimately staffing. We also have Pete Buttigieg in a position to potentially do something about it and basically not acting. So we'll take you through that. You guys probably also saw President Biden taking a spill off of his bike. It appears to be fine, but raising new questions about whether or not he should run again in 2024, if that's the Democrats' best chance. And we also have some new troubling developments in Julian Assange's case. They're continuing, the U.S. and the U.K. government continuing to push for him to be extradited here. So we've got all of that for you. Also, Peter Zeihan going to be back here again. Of course, there are a lot of things that he can get into, but we want to focus in particular on how we may be entering a new phase where inflation is a lot higher than it used to be, as globalization sort of is going away in certain respects. So be interesting to talk to him. But we wanted to start with these latest comments with regards to the recession. We heard from Janet Yellen, she's of course the Treasury Secretary, about whether or not she thought there would be a recession and also how long she thinks inflation is going to hang around. Let's take a listen to that.
I don't think a recession is at all inevitable. Chair Powell, clearly inflation is unacceptably high. It's President Biden's top priority to bring it down. And Chair Powell has said that his goal is to bring inflation down while maintaining a strong labor market. That's going to take skill and luck, but I believe it's possible. I don't think a recession is inevitable.
Prices are going to go up before they go down, right? Again, most economists expect the inflation rate to move up to around 7% by the end of the year. Does that sound about right to you?
Well, we've had high inflation in the first half of this year, and that locks in high inflation really for the entire year. But I do expect in the months ahead that the pace of inflation it's likely to come down, although remember there are so many uncertainties relating to global developments.
So there's a lot to read between the lines here.
Yeah.
First of all, it's never a good situation when you're using language like, well, it's not inevitable,
a
recession. It's like, okay,
Yikes.
So what are we talking? Like a 5% chance of avoiding it, a 1% chance of avoiding it? So there's that. And then there's also the fact that, in spite of the fact the Fed's taking some pretty extraordinary action now, increasing the level and the pace at which they're lifting interest rates, there's still every expectation that inflation is going to continue at least through this year. And what does that mean? That means the Fed will continue to act and potentially continue to escalate those actions. Ultimately, since that's basically the only thing that we're doing to tame inflation, that means they are coming after, your ability to buy a house. They've said outright they want to get wages down. They want to cool off the labor market. We'll get to in a little bit when we talk about unionizing. That is part of what has enabled a lot of the activism across the country. So yes, of course we have to get inflation under control because it is devastating working class people. But when we only lean on the Fed to do it, we leave a lot of things off the table. And by the way, where we are at this point, a lot of that, to the extent that the extra stimmy checks in the accounts and whatever help to spike inflation, a lot of that is burned off. There are a lot of other issues that we're facing that are causing inflation the Fed has nothing to do with.
Yeah, we see that all in the credit card data. We see it in all the increased borrowing and the cooling off of the housing market. Even in terms of demand, Americans are beginning to curb both restaurant and gas use, meaning that quality of life is declining. And I'm not saying it's a right, but anytime that you have to diminish your quality of life in order to make basic ends meet. Viral videos going around of people saying, I got to choose between food or gas this week. I mean, that is a horrific position in order to be in. You also see that the talking point originated with Biden himself. Let's put this up there on the screen. He did his first sit-down interview, finally, with the Associated Press, only 30 minutes, but actually, he was pressed on inflation. Here's what he said. First of all, it's not inevitable whenever it comes to the recession, so we see that bled into the Treasury Secretary's comments. Secondly, he says, quote, we're in a stronger position than any nation in the world to overcome this inflation. Then he pivoted to defending himself and saying that we have the strongest job market since World War II, and then we have 3.6% unemployment rate, and talked about wages. I don't know why they continue to go to this post-World War II talking point. You know, this is a good parallel, actually. Consumer sentiment post-World War II was actually terrible. We had very high inflation at that time, and Truman nearly got kicked out of office for it because there was massive chaos in the labor market. Because once again, global events, you come out of a crisis, it spikes huge problems, and it sparks real questions like, what exactly are we going to do as an economy, and how are we going to conduct commerce coming out of this? And Biden doesn't have an actual answer for that. And this just gets to what you're pointing to. There's only two ways really to quote unquote solve inflation. You can induce a recession, which is basically what the Fed has decided to do, or you can try and deal with many of the supply side factors. Well, guess what is much, much harder to do, both politically, but would actually solve the key problem in the future, because this is the thing, even with inducing a recession. Recession, to the extent that it can, quote, solve inflation, that just means that you're going to reduce demand for everything across the board and hurt all business. Okay, I mean, I guess that means the price is down, but you know, 1979 was a miserable year. 1980, we actually went into one of the most painful recessions since the Great Depression in 1981, which is a direct result of the Federal Reserve. And to the extent that inflation was even, quote, solved after that, it was mostly a result of the global cooling off on the oil markets and learning how to deal with OPEC, the Iranian Revolution, and all of that. So even there, the Iran-Iraq war probably had more to do with solving inflation than the actual Federal Reserve. I'm reading a book about the 70s right now, so it's very well read up on this.
Well, yeah, and Saagar will be talking more about that in his monologue. The parallels are, we've both been pretty fascinated by the parallels lately, because even within like the left group infighting, there were parallels, and there's just a lot of strange parallels going on. But yeah, I mean, there was one other detail in this interview with Biden it's a little bit of an aside, but I think the audience would be interested in it, which is, remember how they hung the portrait of FDR in the White House, and this was a signal of like, I get it, and I get the challenge, and we're going to have a new deal, and I'm taking on the mantle of Roosevelt. Well, you learn in this interview that he actually had nothing to do with it. It was, I guess, John Meacham that hung it there. And he looked at it and said, why Franklin Roosevelt? Not that I don't like Franklin Roosevelt, but why put that big portrait of Franklin Roosevelt? And Meacham said, no one ever inherited that kind of big circumstances and more dire straits than he did that last time. And I said, oh, that's encouraging. So anyway, apparently Biden never really embraced this FDR thing. I think that's pretty clear at this point. But go ahead and put this next tear sheet up on the screen, because this article, I really recommend people actually go and read the whole thing. It's from David Lynch at the Washington Post. Fed's interest rate hikes may mark start of tough new economic climate. And I'll read you a little bit of this. So they said for 40 years now, the formula for U.S. economic growth has been the same: cheap money. And that has been led by the Fed. Consumers could borrow easily to buy homes and cars. Companies, whether profitable or not, could tap bond investors for cash to fund their operations. Washington could afford to bail out both Wall Street and Main Street by running eye-popping budget deficits made possible by borrowed funds. Now, with the end of that easy money regime, you're in a very, very different era. So, I mean, you remember not that long ago, the sort of conventional wisdom was stock market only goes up. And you can understand why people felt that way, because we had a crash during the coronavirus crisis, but it was very short because immediately the Fed leaps into action to backstop everything. And so even as much of the economy was on hold, I mean, people were at home, there was very little that was actually happening. The stock market kept going up and up and up. So you were seeing these twin headlines of like, you know, massive unemployment, massive numbers of people filing for unemployment claims, and yet stock market at record levels. So there was just very recently this assumption that, oh, you can't lose, right? I mean, this thing it was fake. It was completely divorced from any kind of reality. It was backstopped and propped up by the Fed. Now that's being pulled back. And so we're going to talk in a minute. Of course, crypto has taken it on the chin. But you had asset bubbles in basically every category. Now the air is coming out of the tires in every single way. That is leading to a very new reality. I mean, you've had, they say now the total value of debt that's considered distressed by S&P Global Ratings has nearly doubled over the past month to $49 billion. That includes securities for companies that you know and have heard very much about, Rite Aid, Bed Bath & Beyond, they mentioned. So, this is a pretty extraordinary shift. And I think it really remains to be seen how the economy handles it, because we've had effectively zero interest rates for the Fed, more or less, for quite a while now, certainly the last decade. The amount that they have propped up these asset classes has been extraordinary. By the way, that's part of what fed inflation. I know everybody, loves to talk about like what went to consumers and regular working class people, but there was far more money, trillions of dollars, that was injected into to backstop the markets. That fed inflation ultimately, it also fed massive inequality. And so now as they try to unwind that, it's going to be, you may not have benefited from that on the way up, but it is going to be pain all the way around if the only way we can get out of this cycle is for the Fed to trigger a recession, which is where we're headed.
Yeah, and I just, emphasizing again, there's actually a decent quote here by the chief research officer at Barclays Bank, where she's like, look, this truth is that this economy is designed to run off of low interest rates. And so we are reshaping the fundamentals of all of the Fortune 500 companies and the way that they are going to have to behave. All the way from, the fact is now that higher interest rates mean that they are going to have to spend more in paying down their debt. Two, they're not going to be able to freely borrow in order to invest in any of their actual resources, in capital, both in equipment. Their expenditures are going to probably going to go down as a result of this. This also means, though, that they have to protect their stock price. To protect their stock price, there is only one way to do that whenever money is expensive to borrow. You have to cut cost, which will mean you have to either cut wages or not give wage increases to keep pace with inflation, or you have to fire people. And unfortunately, I think that's the direction that we're going to be heading in. And it really is a result of government policy and of the Federal Reserve. It will have broad impacts on everybody's retirement portfolios, on your ability to borrow. More importantly for all of you, I think, who are listening to the show, is just the sheer ability in order to get hired and the labor market mobility that we saw over the last 2 years, which was extraordinary. And, we're about to get to the labor movement. It could cripple the labor movement. If you see unemployment tick up, which is the explicit goal of the Federal Reserve right now, well, what does that mean? I mean, it means that you're going to have less of competitive of a job market. So you put all that together, and it's a grim picture for people. I don't think there's another way to say it.
There's no doubt about it. And, all that, the froth and the excess that were in the markets, that fed things like these zombie companies, which are losing money every single quarter, but because they can borrow money so cheaply, they're able to make their interest payments and kind of continue to limp along. You had the massive growth of these SPACs, special purpose acquisition companies. They call them blank check shell corporations, that avoid a lot of regulation, a lot of those sort of like spectacularly failed. And so because you had, these massive trillions injected into the market in this way, you created all of these things that now are being pulled back dramatically. And I don't think anyone knows exactly how this is going to play out, because we've never been in exactly this place before, even though there are a lot of parallels with the 70s. We've not ever been exactly in this place before. And Saagar, something you've been pointing to is the consumer sentiment. I mean, if you just ask the American people how they're feeling about things, it is not good at all. Go ahead and put this up on the screen. You can see the best sentiment here they show in this chart, they say, was in 2000. And this goes back to, it looks like about 1950.
1955,
the worst sentiment is now.
Yeah.
Right now. So worse sentiment now than even during, financial crash 2008, 2009.
And the 1970s of high inflation. So,
and the 1970s,
this is literally the worst consumer sentiment on record in the United States. And people just don't seem to grapple with that. It's why Putin's price hike doesn't land. It's why best economy since World War II doesn't land. Unless you are speaking to that sentiment, you are not going to be a successful politician. And Biden, the administration, they have no answer for this. They continue to just be dawdling. They don't appear in step with the broad problem of Americans. We've been saying this now for what, a year? It's like, I don't know how long it takes to learn, and I get these stupid leaks coming out of the White House. Jeff Stein had a story over the weekend about how one idea was to give people gas rebates in order to spend on gas, which would have been a problem given that you don't deal with supply, but they couldn't even do that. Why? Because we don't have enough semiconductor chips in order to make that happen. So even their stupid idea is not actionable because of a supply problem that they also, and Congress refuses to address.
It's too perfect.
Yeah.
And then there's also just, this is another thing that Jeff Stein tweeted.
Yeah.
They've been considering this for 4 months.
Oh my God.
4 months. And they're still apparently considering it.
Right.
It's like, shit or get off the pot. I mean, honestly. And I mean, think about this, not just on this, but student loan debt, like all these things, they float them, they think about, they agonize them. It's like, Jesus Christ, people are suffering now. Take act, even if it's experimental. Like, I mean, this is part of what FDR did, was like, we're just gonna throw everything against the wall. We're gonna figure out what works, what doesn't work, but we're gonna act. We're gonna try things. We're gonna be creative and think outside the box. And I think that more than anything has hamstrung him, because if you look at the trajectory of his entire career, what has he always done? I mean, he's always tried to locate himself in the safest, most centrist part of the Democratic Party. And there's no answers there for a situation like this.
Yes.
I mean, that's why his only move here, he put on his op-ed of, oh, here's my plan, et cetera, it boiled down to, leave it to the Fed. Leave it to the Fed. That's it. And the only thing the Fed can really do is trigger a recession that massively hurts you and doesn't even deal with the real core of the reasons that we ended up in this situation in the first place. It is a sad, sad state of affairs, ultimately.
That's right.
Cable news is ripping us apart, dividing the country, making it impossible to function as a society, and making it impossible to know just what is true and what is false. But the good news is they are failing and they know it.
That is why we're building something new, a new mainstream, a healthier one, something more trustworthy, something that we are going to need in one of the most pivotal times in American history. We are building up here for the midterms, for the upcoming presidential election, but we need your help. So if you can help us out by becoming a premium member today at breakingpoints.com, we're trying to change America for the better and the entire world.
So what are you waiting for, guys? Go to breakingpoints.com and sign up and help us build a new mainstream.